G'day guys, welcome to another episode of Invest with Tim Allen. I am Tim Allen, your fully licensed buyer's agent and mortgage broker with Moreton Bay Finance Broker. If you need help on the buyer's agency side, IPS Buyers Agents is the business. I am once again accompanied today by my colleague Ryan Lay from Moreton Bay Finance Broker. Ryan, how are you?
Oh, fantastic, Tim. Having a great day.
Brilliant. Mate, what were you in?
I'm the finance mortgage broker. Finance or mortgage broker, yeah. So mostly I'm loans with personal loans, car loans, things like that as well, commercial loans.
10 times. How long have you been a broker for?
So I've been a broker for 7 years now, and I've been with Tim at Moreton Bay for 2 years, and I've known him for, it's been a very rewarding 4 years that I've known him for. So
I've got a lot to live up to. Yeah, there's no pressure at all. You're definitely right. Guys, we are talking about income today and how the banks sort of determine that income. We might also touch on one other subject if the video doesn't become too long, but we'll see how we progress with that. So income, Ryan, tell us, how many different types of income are there?
Lots. There's lots. So I don't know how well anyone can see the board, but I've done some basic.
So we'll move the camera so we can see the board a little bit clearer.
Everyone listening to knows you've got your full-time jobs, your part-time jobs, your casual jobs, there's self-employed people. Then you have other types of income such as investment income through shares and dividends and so on. You have rental property income, and then there's government paid like selling. Yes. So as you can see, there's quite a few different types. Everyone would be familiar with obviously full-time work, part-time work, casual work. There's self-employed people, and that's broken up into sole traders, company, partnerships, and trusts. Then there's investment income, which could be dividends from shares and managed funds, etc. Then there's rental income from either short-term stay places like it's called Airbnb, or if you have a rental property and it's rented by someone on a long-term basis. And then there's other forms of income. There's Centrelink to family tax A and B. Some lenders accept your disability pensions and things like that. And then there's pensions and superannuation that you may have, say for example, ex-government employees who have ongoing public service, like defined benefit payments. So those are sort of all of them in a nutshell. The best thing, realistically, if you're full-time permanent, banks absolutely love you because that income it's seen as guaranteed. I mean, of course, anybody could lose a job or quit a job, but in terms of that, if you have a full-time permanent job, the bank will look at all you. Part-time similar, but obviously it won't be a full as many hours in a week or a fortnight, so that was slightly lower. Casual can be seen as a bit of a dirty word when it comes to applying for a home loan. Until COVID hit, some banks will accept 3 months and a job for casual. That's now changed to 6. However, there are some little niche policies with certain lenders, whereas if you have experience in a job, say for example, you're a truck driver and then you go off and drive and do something else, and then you go back to truck driving, they'll take one pay stub as a casual if you've got the history there, but you need to prove that you've got the history. So there's little niches to get around the casual, but in a lot of cases, we are minimum time under 12. So 6 months is the magic number at the moment. Some banks varying up to 12. So self-employed, sole traders are the probably most basic when it comes to self-employed. I'm a sole trader. Tim is under a company structure, so it's a little bit more complex and convoluted. But realistically, for all self-employed people, if you're going to a mainstream lender, they want 2 years of active ABN. So you've been in business for 2 years. Some banks for about 18 months. So your mainstream ones, and then most of them want to see 2 years of financials. So they want to see your tax returns for 2 years, whether if you're a sole trader, it's your individual tax return. If you're a company or a trust or a partnership, they want to see those returns as well as your individual ones. And then it's quite a complex calculation to work out exactly how much income can be used because of the way the accountants do the returns. There's a lot of creative accounting, and we need to be able to extrapolate exactly what we can't use in order to be able to work out what you can borrow.
We might just stop it right there and do a quick little recap. So full-time, you're pretty much guaranteed paycheck week in, week out. The bank doesn't haircut or anything like that, and they're big fans of that sort of thing. We've also got part-time. So if you're part-time, they pretty much say that guarantee because you're going to get paid to sick leave, you're going to get some holiday leave. You just haven't got the same amount of hours as a full-time, which is right about that sort of 38 hours a week, roughly, there or thereabouts. You know, it might be a little bit more, a little bit less, but, you know, let's not split hairs. Casual can be a bit funny since COVID, just purely because of the whole...
The key thing between full and part-time and casual is your hours aren't guaranteed. If you're full-time, you'll be doing 38 to 40 hours a week, guaranteed. Part-time, you might have a contract for 25 hours a week, so you've been doing 25 hours a week. Casual, you might do 40 hours one week, 20 the next. So that's where the banks need to manage the risk to them, and that's where they prefer to have the 6 months so they can work out average.
Yep.
And then basically have something to hang their hat on that you will have at least enough income coming in once they have their buffers. So we did in our last video to know that you can afford the loan.
They also want to make sure that you're not going to be in financial hardship by giving you that loan, which is why they're wanting to sort of average that income. The other thing that we haven't sort of touched on with these sort of income points here is overtime. Overtime is it's not guaranteed. If you're a doctor, if you're a nurse, if you're a police officer, firefighter, AMBO, you're pretty much guaranteed overtime, which then most banks will take 100% of that. But if you're hypothetically working in an airport and you get overtime or shift allowances or stuff like that, a lot of banks will only take between 60 and 80% of that income. So it's finding those policy niches within those specialised fields that allows us to sort of improve that borrowing capacity for people, which is why we chose to be mortgage brokers, and we wanted to have that opportunity to deal with a wide range of lenders and wide range of different policy to allow those opportunities, rather than working for a bank where, you know, you've only got one set policy, and if you don't fit those shoes, too bad, too sad. Mm-hmm. With different banks, different policies and everything like that. We'll quickly recap. So self-employed, look, there are some niches out there with some lenders where they will take 12 months, but then they put a whole heap of conditions to that, which is basically like 2 years anyway. But there is some niches where we can use some 12-month stuff. Ideal perfect world, we basically have 2 years worth of income.
That's consistent, which makes it look great. But a lot of banks, at least a few banks these days will look at 1 year isolation if they can see an upward trend and they're happy with that. And some of them also introduced policies since COVID where say that the owner of the business is paying themselves a wage every week or fortnight, and there's pay slips and they've got salary credits. They won't even look at the financials. They'll just look at the pay slips and the services on that plan. So there's a couple of nice little policy niches in there that we've managed to use to help the finance and recently. So that's good.
G'day guys. Look, that income video is getting a bit long now. I think what we're going to do is we're going to sort of cut the video here. We're going to turn it into a 2-part. So when it gets posted, there'll be 2 parts in 1 week that will come out with this video. So you'll get to see both of us twice in a week. So yeah, look, thanks so much for watching. Bye.